Today's episode is absolutely stacked. We're going to be diving deep into some of your most requested stocks and cryptos that you all have commented down in the comment section below, and trust me, some of these are looking very interesting at the moment. But before we jump into the specifics, we need to talk about the macro shift that's happening right now, and it's showing up loud and clear on the ETH versus BTC chart. And if you've been waiting for signs of an altcoin season, this could be the early signal you don't want to ignore. From there, I'll break down the viewer requested plays such as Render, Cardano, Aerodrome Finance, and even take a look at Tesla for the stock traders out there. And we'll take a zoomed out approach to Bitcoin as we close out quarter one and we gear up for quarter two of 2025. I'll share the key levels I'm watching and what I think could set the tone for the next few weeks to months here in crypto. So as I said, it's a jam-packed episode as always for you folks. You already know what to do. Be sure to grab yourself a cup of coffee, whether it's hot or ice, because we're breaking it all down right now. Before we dive in, a quick shout out to Coinbase, a trusted channel partner here at DataDash and one of the easiest platforms to use if you're new to crypto or you're just looking for a reliable exchange. When you sign up using the link in the description below, you're going to receive up to $200 in crypto just for getting started. A nice boost as you begin exploring the crypto space and expanding your portfolio. If you haven't already, be sure to check it out. In the last update, we were looking at Bitcoin trading at roughly around $83,000 to $84,000. And for me, I was anticipating that as we were going to close out the quarter, that Bitcoin would pretty much just range between where we are now and maybe about $90,000. And one of the big reasons for that is, once again, I look for these things in the sense of timing. And as we started quarter one of this year in January, we began after a pretty sizable move to the upside. And generally, when we see a move like that in the end of a session, so at this point, looking at a quarter, and really at the end of that point, it was a yearly 6 months. I mean, everything was just rallying higher. You usually get a cool down period, and vice versa. If we have nothing but downside into the end of a session, so in this position, I'm looking at the quarter, this whole quarter so far being pretty much down only in the sense of the trend. As we begin our next quarter, we're going to generate some new range data above us. We're going to generate some new high time frame averages. And whether or not that means we're going to see new all-time highs or not, it at least gives us a little bit of leeway that leads us into a position to look for upside in the near term. For me, I'm looking at least for the beginning of Q2. If not, like I said, we'll have to evaluate the context of the market as we reach certain areas. And maybe we will look for that break above these all-time highs and so on. But for now, let's take it level by level. And this is what I'd be looking for as we enter into next month. So just as a reminder, this is how we started off Q1 of this year in January of 2025. This was our previous quarter range. So the data that I'm pulling here from a fixed range volume profile, this is showcasing 70%, aka the value area, aka the range of said region. So this is where 70% of the volume took place, giving us our overall range based on volume, essentially. And there were several things that we had to kind of manage along the way here. We had a pretty bearish harmonic pattern starting to showcase when we had this W formation here right into a sweep of the highs here. And then ultimately all we did was rotate, in this case from high to low. We rotated this range all the way down to the bottom of the value area, which is something we see time and time again, whether it's on the daily time frame, weekly, monthly, quarterly, etc. And currently we are closing out this quarter while we're just trading around this region. Also, $80,000 was a key level. This was a high time frame average. This is the yearly pivot, the average of price for 365 days. Very similar to a 200-day moving average, except for this does not move, and it's for just almost twice that amount. So this is a very key level to be holding above, right at about $80,000. So we are holding that as support. So for now, we have to anticipate at least a bounce back to the upside towards maybe even if we're going to make a lower high and continue lower, or identify the key regions that are going to signify the strength in the market to where we can look for that next leg higher. So as we're closing out the first quarter here, I do have now our developing range for this quarter, which really should not change by this point. This is almost 90 days of data. It would take a huge skew here at the end, whether we got a huge dump or a huge pump, for this to really change anything at this point. So once again, looking at the value area, right, this is the highest, this is 70% of where all the volume took place of all this price action. So obviously it's not only showcasing the volume for this region. There is volume down below here that's grayed out. The highlighted region is where we want to pay attention to. This is essentially the fair market value, if you want to look at it like that. And at the moment, we're basically almost like an oversold territory. Like we're having a deviation outside of the range, if you want to view it like that. Almost if we looked at this as a RSI indicator. Now, last week was just about 2 weeks left of the quarter here, and we were trading at that 83,000. And usually when I've seen this, at least as we're coming into these end of those sessions, we'll kind of just peter out a bit, and then we'll begin that next quarter, usually with a bang, and it's almost an abrupt move sometimes, right to the new high time frame averages. Maybe we'll run up to the point of control of the previous session. So those are the things that I'm going to be on the lookout here in the coming days, and so far it's been playing out to at least give me the inkling that that's maybe what we're going to see. That's where I'd lean, I guess, if I had to say anything at the moment on the current price action in Bitcoin. So we're going to have our point of control, which is coming out right here, which is not only is this the value area right here, this is where 70% of all volume takes place. This is where the most amount of volume takes place, which is the natural target of price. When we get back into a range, that's where price action is going to seek out traditionally. There's no guarantee of this, however. Once again, kind of tracking this as we go, we have to look for a little bit of a break into that range. At that point, we'd anticipate the continuation higher. For me, just looking at this on a structural base where we've been putting in lows, high, higher low, higher high, higher low, higher high, etc., we're forming what is looking like a pretty decent uptrend at this point. Granted, the overall trend is still down. And pair that with the end of the quarter coming up, and we will have these key levels just above us. I do imagine we actually get a pretty decent move up to this area, which is also going to be if we take a Fibonacci retracement of the overall high from $110,000 down to our low we put in just a few weeks ago in the 70s. This is also a gold pocket retracement zone, which is a very likely area for the price to retrace to as well. So this is the line in the sand, in my opinion, for any more upside or for potential rejection and sizable downside. This is kind of where I'll be looking to in the coming weeks here. And to be fair, this could take 2-3 weeks before we even get up to it. We could spend 2 or 3 weeks around this region. And during this time is when we could see the altcoins catch a breather and see some sizable moves. Whether or not that's going to be some new all-time highs or just up only from here, that's debatable. But regardless, we'll see some sizable moves. And then once again, we'll have to look at the context of Bitcoin up around that $96,000, $98,000 area. If we're going to see any continuation through there, see the strength come through, which is going to indicate that the market as a whole is going to see continuation to the upside. And or if that's just going to be an area where we run up to in the next few weeks, altcoins see a decent little burst, and then we just give it all back up again. Now, for me, I've utilized the ETH versus BTC pair to indicate the strength in the market for the altcoins, because if Ethereum is going to potentially outperform Bitcoin for a bit, usually it doesn't just go by itself and the altcoins tend to follow. And personally, I've been tracking a pretty massive keyword, I guess, here is got to be potential, because there is no guarantee, of course. But when I'm looking at this specific setup, this has been printing a huge 6-year bullish reversal pattern that, in my opinion, is what really is going to spark the move here out of ETH versus BTC, which is also in turn going to lead into a sizable altcoin season. And that bullish reversal pattern is sitting right here. It's a harmonic setup, which is a sequence of Fibonacci's. And in this case, this is actually a bullish reversal pattern. Now, always shout out to Scott Carney, the creator of harmonics, the harmonic trader. If you're interested in learning more about that, be sure to check him out. I'll probably do some standalone videos at some point to kind of break down how I utilize these patterns and set up some of the targets, etc. But with this being said, I've been targeting this region for the completion zone as well as the timing. So these two vertical lines right here are actually time-based fibs, which are similar to Fibonacci retracements in price action, where we look at the price to retrace or correct either up or down. You can do the same thing and actually utilizing Fibonacci with time to basically extrapolate how long a move may take to play out, complete. It depends on how you want to look at it. So for me, I'm utilizing this in the sense of a one-to-one scenario, meaning that this is a very symmetrical pattern. Not only is it almost as perfect as you can get in the sense of all the completion, the ratios here, where you have, when you see these areas here, and I mentioned that they were a Fibonacci sequence, this is, if I was to pull this move from low to high and then look at the Fibonacci retracement to the downside, where we're going to retrace some of this move, it was right here. It sits at about 0.5, around the 0.5 Fibonacci. Then we look at from A to B, and if we were to retrace this move to the upside, this came up almost, well, over 90%. Generally, we look for the 886 at that point. and so on and so forth. And then overall of this entire move here, you come back down, and the completion zone generally sits around the 886, once again, almost 90%. So this is sitting right there at the 0.91. So this is all extremely valid in my opinion. And on top of that, when I take the Fibonacci time to look for where the 1-to-1 would be, so once again, looking at this in the sense of a symmetrical setup, which is very important for these harmonic patterns as well. The amount of time it took us to get from X to A to B is the exact time so far that it took us to get from B to C to now D, which comes in right here, which was the end of March of 2025. Could have been as early as December of 2024, but realistically, the ideal scenario was to look for this region here. So this was kind of a boxed area, in my opinion, for time. And mind you, I'm looking at this chart on a monthly time scale. Each one of these candles is a month long. So this is a huge macro setup. This is from 2019 all the way now till 2025. 6 years we've been potentially printing this bullish reversal setup, which to me, I could see this really being the spark into the big move up, at least out of ETH versus BTC, which once again is going to in turn more than likely start off a pretty decent altcoin rally. Now everybody refers to it as an altcoin season. How long is it going to last? Whatever. But I think it's going to be sizable if this does occur. And this is the neutrality in the voice here, right? I don't know that this is not a guarantee, but if I'm looking across the market and I see the sentiment, especially with Ethereum, everyone is counting Ethereum out. Ethereum has the same outlook. If you ask anybody out there, it's a joke. It doesn't do anything. It's just crashing. The price action is flat. Whatever the case is, it's in the case of just sentiment alone, in the gutter. With this setup here, is what we want to see, honestly. We don't want everybody to be super excited about Ethereum, obviously, in the sense of where everybody's piling in at, in my opinion, super discounted areas. Yeah, I'll be looking for a pretty decent reverse out of this region on the ETH versus BTC pair. Now, the key here, though, is that does that mean that the market can't go lower from where we are physically today on March 28th of 2025? Well, for that, I just want to bring back this chart and look at this as an example, because in 2019, when we officially bottomed on ETH against Bitcoin, not ETH on the dollar, this was where we bottomed out at. And then we pretty much kind of ranged around this region. A few months went by, but overall we started putting in higher lows along the way. And one of the biggest areas we put in a higher low on ETH versus BTC was actually in 2020 in March, when we all know what happened around that time. And if we were to look at the the Ethereum dollar amount, we obviously went down. So locally in the next few months here, this is definitely an area where I'm not stating that the bottom is in on ETH, or I'm not trying to be a bottom caller by any means. What I'm looking to do, at least for myself, position myself accordingly, is identify potential reversals areas, right? So spotting reversals, not necessarily calling a bottom or a top. But overall, I think that the macro idea here is that ETH against Bitcoin may have bottomed. But for me, I would be able to put on risk heavily here into Ethereum. Right, we've had our Bitcoin rally, essentially. Our Bitcoin dominance has gone through the roof, and I'm anticipating a sizable move out of ETH against BTC. And here's the thing: monthly time frame, 6 years of this pattern printing. I don't expect this to happen overnight. We could actually have a very sizable time frame where the altcoins continue higher from here. So, yet to be seen, of course. It's something that I'll be looking into, but I do want to point this out, and this was actually one of the first things I pointed out on my video with Nick when I first started with the channel here, and it was just a couple weeks back. But now we are hitting the actual fib time, so I don't take this lightly, and this is something I'm paying attention for really heavily. And once again, this is a macro idea here. Don't feel like FOMO should not be setting in by any means. I'm not trying to incite FOMO. This could absolutely be wrong. Maybe this completely just dumps out from here, right? But to me, when I'm looking at the probabilities and the key regions of areas to put on risk, we always have the risk of going lower. That's just what we have to accept. But if I'm looking for a ideal entry, a fresh region, or just looking for pivots in the market, essentially to where I'm anticipating a reversal to happen, this is lining up really, really well. Okay, requested here, Cardano, and it's a little messy here on the chart. I don't usually have too many lines set up like this. I guess I'll kind of just look at this region right here where you can all see a little bit better. But basically we've had a major impulse, a little bit of a range to the side here, lower highs, lower lows, all the good stuff you want to see for pretty much consolidation before a break higher. I do have some key areas down below us marked out. However, I mean, this would be, we'd probably have to see the Bitcoin price come up to that 98K and just completely reject, and then get a sizable correction for us to get another 60-50% move to the downside. But if I was looking for key regions to where like I don't even got to think about it, if I wanted to get a amazing deal on Cardano, I'd be looking for those areas, putting alerts on my chart, or just maybe I put some isolated bids in those regions and just see if the price comes down to that or not. Do I think it's going to happen? At this point, it's a little hard to call. So looking at the current price action from here, I'd be looking for a little bit of strength to come in at this point, and really that starts with claiming the yearly pivot here. So once again, high time frame, average of price. We actually are sitting in between two of them. So for 2 years, these were the averages, sitting at about 50 cents and 81 cents. And Cardano has really kind of gravitated towards these over the last few weeks. And for me, that's what I'd be looking for. If we start to lose the 50 cent area, which is a sizable way from where we are right now, right? That would be a pretty decent pullback to just already get there. There is 2 volume levels down below, 35 cents. It's a quarterly naked point of control, as well as a 6-month. And really, those are just untapped volume levels at the end of the day, right? So little inefficiencies in the market, brings us back to some key support, all that good stuff. And then below that are just high time frame horizontal supports. Not necessarily the most sought after areas, in my opinion, that I'd look for. But if we were to come down, this would be my stink bids, is what I call it, right? When you get those areas on the chart that when you are well away from them, you don't really anticipate the price action to get there, or it's hard to imagine we would, because right now that'd be about a 50, 60, 70% pullback. But it's crypto and those things do happen. So if it did, that's where I'd probably look to size up a little bit. But for now, I'm looking at the price action as it is. It actually doesn't look that bad. And for me, I'm looking for some more upside here, right? So the first line in the sand to see that strength coming in at this point would be to come up and start living above 82 cents, not far from where we are now. We're sitting at 73 cents at time of recording. At that point, I would look for the move up to our $1.18, which is a monthly naked point of control. So once again, an untapped volume level that so far we've actually front ran twice. So I imagine whether or not we even just range around in this region, that would be a key area that we run up to at some point, maybe take the highs and then get a little bit more ranging action. And then that would be my next key area. I'd look for a flip of support. Then we have a untapped weekly up here at 142. I then would start looking for, and this is just a speculative idea at the moment, but I always look for a harmonic setup when the Fibonacci retracements start to line up. We have 3 points so far, especially when you get these really quick moves, which we got this one on the day of the crypto reserve news, where everything, well, not everything, but Cardano, XRP, ETH, Solana got that really big burst, and we just gave it all right back up. So for me, I've been looking for a potential deep crab setup, which takes us up to the 1618 expansion, which is up here at 183. So that's kind of how I would look at this in the near term here, is that I'd probably look to claim, or I'm going to look to claim that 82 cents, take it up to $1.18, look for the flip here, ultimately come up and complete this potential harmonic up at about 183. Pullbacks will be had along the way on all the things here. And then ultimately my next major target area still remains about 211 to 215, and then we'd reevaluate at that point. So when I mentioned those stink bid areas, which once again, those are just, they're almost regions that you just couldn't imagine it's getting to, especially when we're 50, 60% higher or whatever the case is. But if they do get there, that is where the most fear is going to come in. People are not going to be interested, and that's where you want to most of the time get involved, right? Or at least for myself. Once again, speaking for me, you do what is best for you. Render is actually a really great example of that price action coming into that stink bid area, aka just a super high level of confluence, which was below us. And this would be the area that for me, if I wasn't in Render 2 months ago, this would be the area I'd be looking for. And I actually set up this boxed region, which is comprised of a 6-month volume level as well, naked point of control, right? So an untapped volume level, a untapped horizontal monthly level of support at the time, now it's resistance, quarterly low, which was also sitting around here. And then I had the anchored VWAP, which, especially when you have a really massive move like this, we tend to retrace to the VWAP, which is the volume weighted average of price. So Similar to moving averages, this is just more weighted on the volume. So when you have these really hard impulses up, a lot of times the price will retrace to that region, and I'm anchoring this basically from the low of June of 2022. And that was what made up this box. And I set this up in the right here, I believe, right around the inauguration. And at the time, didn't feel like 70% pullback was what we would see. But for me, that was where I'd be looking to be getting involved with render. So we are now in that range. And could it go lower is the question, right? So it's always the fear. It's always the question you get when you get to these levels. But as long as we're holding, honestly, that anchored VWAP, which is sitting around $3, I would imagine that this is a sizable area where you could see at least a retracement back up to maybe a gold pocket from that high down to the low. Takes us back to $8. Currently, we're sitting at $4 just about on render. So that would be almost 100% move from where we are right now. And this is kind of the thing that I'm pointing out that we may see. Like, even if we're not going to get a up only environment, which honestly, there is no such thing as up only. There's always going to be red days. There's always going to be corrections. There may be some really big bursts that seem like it's going to go up only, but there is no up only, right? So you have to take these moves in stride, and depends on your entry, your strategy, your outlook, your time frame, your risk management. All that has got to be managed by yourself. I'm presenting data here in the coming weeks to months that I don't know how it's going to benefit you. This is just how I'm viewing it in myself. Obviously, please take this and do your own research as well. But assuming that Bitcoin runs up to that region we discussed in the beginning of the video, around that 96, 98, 100,000 again, and even if it just stalls there a couple weeks and then does reject, I can see the altcoins seeing these sizable moves from now, getting this 50% move, 100% move, and really just doing nothing. At the end of the day, that only takes render back up to where we were middle of January, right? So, and it's essentially that would be another lower high, and then you'd look for potentially a rollover there, right? So it doesn't mean up only and new all-time highs at this point, but there is some definite opportunity to be had, and we could evaluate it as we go, and this could grow into a major area that you get in and look to hold that, and we claim some regions and we continue higher from. But for now, I'm looking for that move out of this region. And the sign of strength on this would be to come up and reclaim that quarterly low that I was looking at right here. It's about $4.05. So if you start living above $4.05, we'd look for that move back up to the regions above us, right? So looking for that $8 move, I'd say, and then we reevaluate and take it from there. Aerodrome Finance is another one that was requested from one of the viewers out there. And this has gotten my attention as well because it's one of the few that is, it's a little bit of a newer project, so take that for what it's worth. It doesn't have much data behind it. We could very well start putting in new lows from here. But I do want to highlight that overall, we're just pretty much in a major range. So once again, based on volume here, we had some deviations above, and now we're just trading within that value area, hugging the point of control. So barring a move to basically the bottom of the range before maybe you get a sizable move up, which would be a pretty decent drop, probably about 20 or 30%, 25%, maybe down to the quarterly low here. Barring that move, if we were to see some sizable bounce action from here, which we are at some key support, so once is it the most ideal area to get involved? Obviously, getting involved at lows or highs is the most ideal scenario, but this is at a major discount from where it was just a few weeks back. This was December of 2024, and this is down 80%. Price action is in the gutter. More than likely, the sentiment around it is bad. Fundamentals are something maybe you want to look into, of course, before you do any kind of investing. But this is something that I do look for when I'm looking for things that really haven't popped yet. This is also a project that's available on Coinbase, so I always look to things that are available pretty much to the masses because that has some sizable reach when it comes to some of these things actually starting to pop, and then people start kind of flocking to it. FOMO starts to kick in, and it's easily accessible, right? So just something of note. But just looking at this in the sense of a range, we're at the lows. I imagine we get a bounce. We have a monthly volume level right up here at about 83 cents. Currently, at the time of this video, we're at 53 cents. So even just a move back to that region is about a 60% impulse. So in line with that idea that maybe Bitcoin gets a push as we walk into Q2, just a push up to this level here, which would really be a nothing burger in the grand scheme, but that's a really nice move from where we are now, right? So that's where I'd look for the next move up here. And then ultimately I'd look for the range rotation. So I'm rotating from the low in this case to the high, which is also our yearly pivot. So this has been tapped already, so it's not, I don't give it the most credence as when it's untapped as far as looking for moves to and from and what have you, because it has already been met. But it is a key region nonetheless, and we will be looking for it as a key resistance level at that point. So we're also right at the high of that range. So if we were to see a move from this region to the high, that's 143% move. And once again, nothing's really being done at that point as far as putting in any new structure. We could easily see a move like this and then just give it all right back up, come back down into the range. That's why taking profits or having a profit-taking strategy or just being aware that that's what could happen, right? I would not want to be buying Aerodrome probably at that point. If we saw a sizable move in the next few weeks, I don't look to chase 143% pumps, even if it could go higher, because you are always subject to moves like that. But that is how I view Aerodrome in the coming weeks here. We're trading at the low of the range. Potentially we swing the lows here for about 24% lower. Looking for the move up either way up to about 83 cents. Flip that, and I'm looking for the year pivot at 125. And then from there we'd reevaluate, see if we get a break higher, or if we're just going to continue this range. Going to finish off with a look at Tesla as well, another request from one of the viewers out there on the DataDash channel. And what I like about the Tesla setup that I'm going to be showing you here is that thinking back to the ETH versus BTC pair, where we have that harmonic pattern that looks and feels like the price is never going to reverse out of, and we're trading towards the lows, and you've given up years of gains and what have you. Tesla actually had the same exact setup, very low time frame compared to the ETH versus BTC, but it's a really good example because I do want to showcase how powerful these can be. And when they do start to confirm and break higher, there's specific targets in play. And this is something that I do anticipate to see for the ETH versus BTC pair, which overall leads to potentially a altcoin season. So the setup here on Tesla, same deal. We had a bullish reversal pattern put in play. This is the same exact setup. This is the bullish bat harmonic, which once again is a sequence of Fibonacci's that once confirmed has a set list of rules and targets. And in this case, this has a couple of key regions, one of which being the 0.382 retracement, and that is just a simple fib retracement from the overall high to the D point low. And that gives us our first target here for Tesla. And once again, this is on a daily time frame. I don't expect it to get there in a hurry. We've easily already seen some high, some low. We've just got another impulse. Potentially we get another pullback, maybe to like the 240 region, put in a higher low at that point, and then continue on up. We have our quarterly VWAP coming in right there as well. So all that sits at about $322. That's our major target one of this setup in just the near term. And then after that is our B point, which sits at about 373, and then the gold pocket after that. So this is how I would look to stair step Tesla here, assuming of course that these lows hold. That is the trajectory I'm looking for here. Now there is a ton of levels down here below us that we did front run. So I don't love that. So for those reasons, when I look at this, it's important to know that even though this is target 1, this is target 2, this is target 3, they may not all get met. This pattern could very well come up, hit the 322, and then totally roll over back down into this region here. So that is something to be aware of. And then as well, there is no guarantee in trading or investing. This could very easily still roll over here, and then we would get the move out of this region, right? So for now, I'm looking at these lows to hold in the sense of almost like a stop loss, I guess, if you will. Granted, I wouldn't be entering at this position with a stop loss down below or viewing it in that case. But yeah, that's how I'd look at that. And then if you're looking for the price levels of that box below, just assuming, in case we do break lower, it's 174 up to 189 is that region. That's just below all the lows on Tesla. And it would still honestly keep this bat valid. At that point, it would be a alternative bat, which we'd look for a bounce out of. So for those reasons, you have to be cautious around these areas here, right? So for now, no reason to think that the uptrend locally wouldn't continue, at least back up to 322, but signs of weakness would be coming down, starting to lose 223, which is our last local low. Of course, the D point, which is our low currently at 215, gets lost. I think we're going to see that move down at that point. So that's how I'd be playing this on Tesla here in the near term. Can't necessarily get too bearish at the moment. We are looking higher from here, but we have the setup and the outline and the strategy at place, right? The risk is managed. All right, that's going to wrap it up for today's episode. I really appreciate you all tuning in as always. And hey, if you're still figuring out where to trade or invest in crypto, don't forget Coinbase, our trusted partner of the channel, and a solid choice, especially if you're just getting started. You can use the link down in our description to sign up and get up to $200 in crypto. It's a great way to explore the space with a little extra to work with. Thank you all again for watching. Please be sure to like and subscribe to the channel so you don't miss out on any of our daily uploads. I hope you all have a great remainder of your day. I'll see you all in the next video, and until then, everybody, cheers.